Good morning, everyone. Joseph Lackland here with another pre-market morning report. It is Thursday, May 7th, 2026. It's another beautiful spring day here in the Midwest. It is a little bit cold, but it's warming up. I am looking forward to spending some more time outside. It has been unseasonably chilly here lately, and it was about 45 degrees when I got in the car this morning to get some coffee. So I'm looking forward to some warmer weather. Let's check in with the market. I'm going to keep this short. Nothing has really changed. I did see that the price of crude oil is lower, so we're going to get into that. When I turned on my screen this morning, I saw that it was trading around $91, and it really has not moved since the NYMEX opened. So we have another, pretty decent range overnight. We dropped another $5 overnight. We started the session at around 96. So right here, and 96, 95 area was the NYMEX open from the previous session as well. So obviously we had a catastrophic breakdown in the market. We dropped about 13%. Then NYMEX opened up. We did not move at all for basically the entire session. And then we opened the session steady, and then overnight, right at London, we started to go down again. So London started to sell energy once again, pushing the futures down to about 92 from 95, a 300 tick move in about an hour, and a down draft, steady stair step, dead cat bounce. And that brings us to where we are right now. So that's crude oil. Let's look at gasoline. The gasoline market is correcting. Gasoline has been really strong. It is now starting to give back some of the rally. That catastrophic break in crude obviously dragged the gasoline contract lower with it. It is still very elevated. We are at a multi-year high in gasoline, and we are one news headline away from probably screaming back to the upside a few thousand ticks when the market finally gets another dose of reality. The main theme here is that the market is choosing to continue to ignore the worst energy crisis in history. We have NASDAQ at an all-time high. Yet again, the NASDAQ is now up 6,000 points almost since the start of the month. So this is the best performing month in NASDAQ in history. The S&P is a similar picture. We have rallied over 1,000 handles in the S&P from 63.50. We are now trading at 74.05. So 7,500 is only another 100 handles away. We'll probably hit that. And if we keep this up, the market may just go to a zillion here in a few years. Now, I don't know how much it's going to cost for a loaf of bread or a sandwich, but the stock market will be at an all-time high, so that's good. The chart that I pulled up yesterday that Claude made for me, I'm going to reference this again. Show me a chart of the cumulative deficit for the next 3 months and represent that in such a way that demonstrates that the oil has to come from somewhere. A cumulative deficit has very serious long-term consequences. So while the market is in la-la land, while it continues to ignore the worst energy crisis in history, the facts have not changed at all. The strait remains closed. The war is still escalating. We do not have a definitive peace deal. We may be in preliminary negotiations to fix the problem, but there is nothing concrete. This is a pure hope and optimism sort of scenario. And it amazes me that people will seemingly bet their entire life savings and billions of dollars of other people's money on hope and optimism. This market is not connected in any way, shape, or form to the laws of supply and demand or fundamentals. The total deficit of crude oil over the next 5 months is estimated at around 2 billion barrels, building at 13 million barrels a day. That is the current deficit. The Strait of Hormuz, once again, is closed. I'm going to say that again. The Strait of Hormuz remains closed while all of this is going on. The SPR remaining estimate at the end of this period is about 290 million barrels. So we're going to draw a lot more out of this strategic petroleum reserve to supply the rest of the world with crude oil because they can't get it anywhere else. And we're now the top exporter of crude. And we're not producing a whole lot of crude at the moment. So we're simply taking it from storage facilities. SPR buffer crisis at start. SPR buffer at crisis start was at about 400 million. So this is roughly 350. It's 400 million, let's say. And now, so here we have an SPR drawdown, another SPR drawdown, and then commercial inventory liquidation is the other part of this. And then demand destruction substitution as more and more energy becomes unavailable, that will automatically slow down productivity, and the demand will subside because productivity is grinding to a halt. And then unmet structural hole, the hole just continues to get bigger. That's the pink rectangle here. So the unmet structural hole is the unmet remainder. No source will cover this going forward. You cannot print more crude oil. You can print as much money as you want to buy as many stocks and bonds as your little heart desires, but you cannot print more crude oil. It actually has to be extracted from the ground. And the fact that the price remains at $91 while the deficit continues to grow, the biggest deficit in history, makes absolutely no sense whatsoever, and the market cannot send the correct signal to the actual energy industry to invest more and plan to extract more, to produce more, to handle the deficit and the demand that is going to continue and persist, because the world continues to use roughly the same amount of crude oil. The world is not diminishing its crude oil consumption right away. It still moves and flows and ebbs accordingly to whatever it's been doing for the recent history. It doesn't just automatically adjust and change. I'm not driving any less because of the war. I don't drive a whole lot anyway in the first place, but I'm not driving deliberately less just because there's a war. Now, if the price of gasoline were $20 a gallon, I would definitely be driving less, because the higher price would cause my demand appetite to go down. This is the normal market function. This is how price discovery actually works. You have super high prices, and then all of a sudden people don't want to pay those really high prices, so they make adjustments. Prices are really low. Okay, let's drive. Let's do whatever we have to do. It doesn't matter. It's only a few dollars a gallon. I'll take a ride here. I'll go to the park. I'll go on that, 1 or 2 day road trip. So we would adjust to changes in prices. We see prices going up at the grocery store. There's people that are actually eating less. They're consuming less because prices of food are completely out of control. So people are going a little bit more hungry because the prices at the grocery store are a little bit more. These are the laws of physics, and the market is definitely not behaving like it is governed by the laws of physics, when in actual reality, it is governed by the laws of physics. This NASDAQ and this S&P market are going up because of AI and hope and optimism, and it's going to be pretty hard to run a data center with no energy. So sooner or later, this is going to come to a point of maximum saturation, where the reality of the situation can no longer be ignored, And it may take something drastic to the tune of going to the grocery store and there's nothing on the shelf because there was no way to ship it because we don't have any gasoline. So this is just going to continue. We might be watching this play out for quite a while. It seems that the ability for the market to ignore reality is very, very great at this point, and it is the belief and notion that this will all be resolved very soon by our illustrious leaders waving their magic wands and making all the problems go away. And while they make all the problems go away, they're going to magically restore production overnight to 100%, and then we're just going to get back to normal. I've got some news for everybody. I know you don't want to hear it because we love to avoid reality in this modern day and age. We're not going back to normal. I would love to see us go back to normal. That is absolutely not happening. The metrics that I'm looking at, the facts, the deficit, the numbers, it's all telling me something, and the market is trying to tell me that that's not the case and everything's fine, and I don't believe it. So I don't want to ramble on and on and on. It's more of the same in here in the market. The market continues to push the all-time high. There's no real mysterious technical pattern that is emerging here. This thing is simply going up. It's going to keep going up until it stops going up. And the reason I'm not going to try and make too much out of this technically is because the numbers don't really make sense at all. What we're looking at on our screen every day is not real. There's no way that this is real. It's very puzzling to me. If you have an idea of what is actually going on here and why crude oil remains at $91 despite a 13 million barrel per day deficit that's cumulative and building over the last couple of months with no reasonable indication that the situation is going to change anytime soon, please let me know and we can talk about this. I would like to get some help in this department from some other people. I want to get a different perspective because I look at this every day and I know how I see it, and I want to hear and see how other people see this and what's going on here. So hopefully I will get some good script demonstration videos done at some point. The market activity has been mostly overnight while I've been asleep. And when I come in here, the market's not really doing anything. So that doesn't make for a good script video. So hopefully the activity picks up soon. Tomorrow is Friday. If you're trading this market, good luck out there. Watch out for news headlines. And I will talk to you guys soon. Take care.